from the heart of where innovation, money, and power collide. In Silicon Valley and beyond, this is Bloomberg Technology with Emily Chang.
I'm Emily Chang in San Francisco, and this is Bloomberg Technology. Coming up in the next hour, Media Deal Monday, a Bloomberg scoop. AT&T will combine its WarnerMedia division, including HBO, with Discovery in a $43 billion deal. We're going to hear from both CEOs ahead. Plus, Discord started out as a way for video gamers to chat online. Now the platform has 150 million active monthly users who are using it for just about everything, from musicians chatting with fans to kids doing homework with friends. We'll talk with co-founder and CEO Jason Cetron, who turned down a $12 billion offer from Microsoft. And the plot thickens in the divorce of Bill and Melinda Gates. It turns out Microsoft investigated Bill Gates' involvement with an employee almost 20 years ago. We'll have the details, plus what it means for Microsoft and the Gates' massive philanthropy efforts. All those stories in a moment, but first, U.S. stocks falling Monday as jitters over inflation linger. Bloomberg's Kriti Gupta has the story. Kriti, walk us through the day.
Well, Emily, red on the screen. I feel like I keep saying this. I'm on a loop here. Tech underperformance is the story of the day, as usual, is what it seems like. You can really see on the board behind me, the S&P 500 down in the red, energy and materials in the green. It's really that tech underperformance, once again, that really pulls it down. And you see that it gets even worse as you get to the semiconductors, down nearly 1%. And you can't even blame yields this time, because yields actually rose just 2 basis points, not enough to spook investors the way we saw it on back in February. I do want to bring to your attention, though, Bitcoin, because that seems to be the other slide that we're really paying attention to. On a 7-day time frame, it just seems to go lower and lower and lower. And this really does have something to say, because Bitcoin has become a little bit of a risk sentiment indicator. Not only has it been trading in line with some of those technology stocks, but it's taking crypto stocks with it. And lastly, we have to get to the big story of the day, which is, of course, that Bloomberg scoop you mentioned. AT&T and Discovery, both green on the session in the morning, but then turning red. Discovery was up as much as 20% at one point, now down 5% on the day, Emily.
All right, Kriti, thanks so much for the roundup. Appreciate it. More on that big mega merger today, with the media assets of Discovery and AT&T dominating the headlines. My colleague David Weston spoke with the CEOs of both companies to talk about the deal.
We looked at what John has, King Kong, Godzilla, the incredible brand of HBO, Sex and the City, Game of Thrones, Superman, Batman. And we started to think about it as a combustible combination. You got some incredible IP that people will pay for before they'll pay for dinner. And then we have a bigger library than Netflix with content that people love, whether it's Oprah or Chip and Jo or Food Network or HG or the BBC content, Planet Earth. And so I think this is just a way that kind of assures that Warner, probably the top of the pyramid in quality IP and quality talent that's loved all around the world, together with the content that we have, that where we are already the largest global media company. We have more global IP than anyone else. And when we come together, we think it makes us a real formidable global IP business to compete with the best in the business.
So John, David says that you're at least in the same sort of business, even if they're different ends of the business. But you've also had something of a change of heart here. There was a major strategic decision made to really move into the media business as a telephone company. And now you're really reversing that. You're going to go back to your roots, the telephone company. Let me understand. Looking back at it now, was the strategy wrong, or did something change in between? Because let's be frank, you're leaving some money on the table. There is some value being destroyed.
Well, I'd probably dispute whether or not there's value being destroyed. I'd actually say that we've managed to increase the value of the assets we bought by maybe about 30%. If you look at the cash we've taken out of the business, the assets we sold, and the effective value of this transaction, and some reasonable assumptions that once it trades as to how it's going to trade at a multiple.
John, I just want to make sure I understand that. I think you bought it at $85 billion. This is $43 billion. Are you saying you got that difference out in cash?
well, we're getting $43 billion in cash, and we're getting 71% of the equity of the new business. So there's two parts to that. And the point of view that I think I'd have on this is the team's done a remarkable job of pivoting the asset to be effective in the direct-to-consumer world. And that's really the value that I think David and the rest of the industry see it right now.
AT&T CEO there, John Stankey, along with Discovery CEO David Zaslav, who will run this newly merged entity. Joining us now to talk about the impact on the streaming industry, Neil Macker, Senior Equity Analyst in the Media and Video Games Unit at Morningstar. Neil, this is quite a sudden turn for AT&T that at one point wanted to stream all of this video on its customers' cell phones, and now merging, CNN, HBO with Oprah and HGTV. What's your take on this deal?
I think it's a great deal for Discovery and its shareholders. In terms of the AT&T shareholders, I think AT&T is getting back to its roots here. As a telecom company, we've seen Verizon do something very similar with its media assets. I think, if you look at something like Comcast, the difference between the NBC Universal deal and the WarnerMedia deal are something that NBC Universal, Comcast got that at a discount, built it back up, and now it's sort of running at a high level. Well, WarnerMedia was being pretty well run prior to AT&T. And so I just think there's also been some culture disconnect there, too. And by spinning out the asset and combining with Discovery, I do think they're unlocking some of the value that's been hidden within the much larger AT&T wireline wireless business.
So let's talk about David Zaslav said he's still got a lot of work to do trying to keep talent on, including Jason Kilar, who's been running WarnerMedia. What do you expect, and what do you think Zaslav should do in terms of some of these more premium assets and more premium executives?
Yeah, I think he's got to keep some of these guys on. I'm not going to say which one specifically, but obviously WarnerMedia has had a ton of turnover over the last few years, and it sort of started stabilizing within the last year. We've been seeing some positive results and some tailwinds that they've been talking about. I think it'll be tough, though, with some of these people to keep them around, simply because there's going to be, people on both sides of this who think they should be running both sides of the company or having a bigger say. And so we'll see how well David and his team can hold on to all these assets, particularly over the next year as we're waiting for regulatory and shareholder approvals.
What do you think the biggest challenges are going to be? A lot of these folks signed on thinking they were doing one job, and now it's changed again.
Yeah, I think it's going to be that. I think, if we're looking at the businesses, it doesn't seem to make sense to run a Discovery Plus and an HBO Max as completely separate businesses. So there's going to be a lot of people who thought they were going to be running this major product, whether at Discovery or at HBO or WarnerMedia, who may find that their job is not as big as it was. So that's going to be one challenge. I think another challenge is going to be just, getting these two companies together. While they are both media companies, have had sort of very different, Discovery is very lean, very well known for keeping things very close to the bone, while WarnerMedia has gone through a number of layoffs and cost cutting due to the tie-up with the telecom company. It is still more of an old school Hollywood media company. So we think there could be some growing pains there as well. But that's going to be one of the keys, and one of the keys for David, who's done a great job with Discovery, and I expect we'll have similar success with this new company.
Interesting. Well, mega merger indeed. Neil Macker of Morningstar. Appreciate your analysis there, one we will be watching. Meantime, coming up, the social network favored by gamers, but used by everyone from musicians to teens doing homework. Discord is expanding to break out of its niche and draw in even more users of all backgrounds. Co-founder and CEO Jason Cetron joins us next to talk about what is next after turning down that $12 billion offer from Microsoft. This is Bloomberg. Discord was founded in 2015 as a way for video gamers to chat with each other while playing. It has since become a hangout spot for, just about anyone, including musicians, meeting with fans and friends doing homework, or even just watching TikTok together. Users doubled last year during the pandemic lockdown, and Discord now has 150 million monthly active users. It's also testing a way to let users sell tickets to virtual events, opening a huge new possible revenue stream. This after Bloomberg reported that Discord turned down a $12 billion takeover offer from Microsoft last month. Joining us now to discuss, Discord co-founder and CEO Jason Cetron. Jason, thank you so much for joining us. So you started Discord after a video game that you were working on didn't become a breakout hit, and now it's used for all kinds of reasons. Start us off by telling us what use cases on Discord are most popular and what trends you're seeing.
Yeah, hey Emily, thanks for having me. Yeah, 6 years ago, we launched Discord because we wanted to create a better way to talk and hang out with our friends, around playing video games. And really over the last 3 or 4 years, we've seen people take the service and begin using it in so many interesting different ways. Today, people who play video games and time spent playing video games is a smaller, sort of percentage of the time spent on Discord. More of it is actually like people just hanging out with their friends. Study groups are very popular. Hosting book clubs and karaoke nights. And there's a very wide range of things that people are doing that give them this sense of belonging because they can spend real quality time with people they care about.
Now, 80% of your user base is outside the United States. Tell us a little bit more about the demographic. Are these mostly younger users, and in what countries?
Yeah, so on Discord, it turns out that we have a very privacy-centric viewpoint. And so we don't actually track demographic data about our users at scale. We've run surveys, so I can share that, what we get from survey data shows that people tend to skew younger in the, 13 to 25 range. People who have very active friend groups. And, as you get older, it's like into my demographic, it's more like folks who have, extended groups of friends that maybe have moved around or they don't see them every day as much as they would like. But it's people of all shapes and sizes use Discord and find belonging on it.
Now, in terms of revenue streams, you're testing ticketed events, partnerships with labels, and you're bringing in more than $100 million in revenue. Talk to us about the revenue streams and how you plan to grow them.
Yeah, so the way that we make money on Discord is by selling a subscription service called Discord Nitro. It costs $4.99 or $9.99 a month in USD in the United States. And what it does is it makes your experience more fun. So on Discord, there are no ads. We don't make money selling ads. Instead, you pay money for the subscription service, and you get to do cooler things like send animated emojis or customize your profile. And we did just announce that we're launching something we're calling stage discovery along with paid ticketing. And what's interesting about that is, as we've seen this shift from mostly playing games to doing all sorts of things on Discord, people have been spending more and more time hosting bigger events, recitals, something like financial literacy classes, things like this, and people want to charge for access to that. So we're going to be creating a surface where people can go to discover all the interesting conversations happening in the public communities on Discord, as well as allow those communities to, in some cases, charge for access.
Now, Discord incorporates what makes it unique. It incorporates video, audio, and chat and text. Talk to us about what differentiates Discord from, let's say, a Clubhouse or a Twitter Spaces.
Yeah, there are a lot of apps that have these different features, but what makes Discord really special is how we bring it all together into a unique experience. So Discord is very focused on group communication. So on Discord, you create a space, which we call a server, and then you can invite people in, and you create this kind of invite-only environment where, let's say, maybe I'll invite you in and 5 or 6 of our friends. Most people have a group anywhere from 6 to 10 people on a Discord. And it allows you to organize your conversations in different text channels. So you can have kind of topic-based channels like, cat picks here, scheduling here, general conversation here. And it actually prompts people to talk more because there are places to put these things and you're not kind of stepping on each other in one long group thread. And then we have voice and video channels, which act kind of like always on conference calls. So if you and I were having a conversation on Discord and talking, and a third friend of ours who already was invited into that server saw, they could, tap on that voice channel, pop in, and it almost be like as if they were like walking into, a living room and we were both sitting there talking. So you can kind of have these serendipitous moments where you can run into your friends online. That's very unique. So it creates this feeling of place.
Now, the discussion of meme stocks and, of course, GameStop has been big on Discord. Wall Street Bets had its own server there. At a point, you actually banned the server, as I understand it, not for financial fraud or reasons related to that, but because of hateful language, misinformation. What's the status of Wall Street Bets on Discord now, and retail trading discussion in general?
Yeah, well, it's really important for me to say that we have a zero tolerance policy for hate speech, extremism, and these things. And when we identify these issues, we take action on them, which as you mentioned, is ended up what happened in this moment that you're referring to with this community. Today, my understanding is that they have a server that's live, it's well moderated, and it's a thriving, interesting place you can go to have conversations about stock trading. Generally speaking, there's two main ways that people use Discord. There's the smaller groups, which I've been talking about. They're like study groups, playing games, hang out with friends, and those are 6 to 10 people in a server. And the overwhelming majority of people on Discord are in those kind of groups. Like 80% of our groups are like that. The remaining sort of there's like 1 to 2% that we call these public communities, where you can go and discuss and meet with people around interests that you're excited about, whether it's stock trading, learning a foreign language, all sorts of things. And so there's many conversations happening around financial literacy, and we're very excited that people find belonging, connection, and can learn through those topics.
Now, Bloomberg reported that Microsoft tried to buy Discord for $12 billion and that you rejected that offer. Everyone wants to know, what can you tell us about what really happened, why you turned that down, and what's next instead?
Well, what I can say is we got numerous offers, but I can't comment on anything specifically because we're under strict NDAs with these things. What I can say is that our business is doing extremely well. Discord Nitro is very popular, and last year, in fact, our user base doubled in growth through COVID, but our revenue tripled. So we feel like we are positioned to create a next generation communication service where people can really come together and find belonging. This trend of people spending more and more time online has been going on for a decade, accelerated a lot last year, but I think we all expect it will continue. And people want to spend meaningful time together. And so we're very focused on our future of creating space for people to find belonging so they can have more fulfilling lives.
Well, with the world coming out of lockdown then, do you think, could that cut into some of the time that Discord has racked up through the pandemic, when you're not just competing with TikTok and Netflix, but also restaurants and movies and just getting out into the world?
Well, I know for myself, I plan to spend a lot more time outside very soon. So, the beautiful thing about Discord is we're not, a sort of scroll forever business. Unlike other social products, there is no feed, there's no likes, there's no way for things to go viral on Discord. It's really about conversation. And so, for us, I fully expect that people will go outside more and they will spend less time using all internet services, including Discord. But at the end of the day, when you come back home after school or work and you want to check in with your friends and see what's going on, Discord will be there for you to provide a place for you to find belonging and comfort no matter where your friends might be. And I don't think that's going to go away.
All right. Jason Cetron, CEO and co-founder of Discord. We'll keep our eye on you. Thanks so much for joining us. All right, coming up, as Bill and Melinda, their divorce proceedings proceed, the Gateses, it turns out that Microsoft investigated Bill Gates' involvement with an employee back when he was CEO. More on that next. This is Bloomberg. More details are emerging around the high-profile divorce proceedings of Bill and Melinda Gates. We now know that the Microsoft co-founder was investigated by the company's board over his relationship with an employee. I want to bring in Bloomberg's Ian King, who's been following this story, and this investigation dates back, I believe, more than 20 years ago. Ian, what exactly did the board investigate, and what did they conclude?
Yeah, the relationship is one that happened around 2000 from what Microsoft and from what the Gates' representatives have told us. The investigation actually started in 2019, which is when the person involved in that relationship felt the need to bring various aspects of this relationship with Gates to the attention of Microsoft and the board. That investigation started, was never concluded. While it was ongoing, Bill Gates decided to step down from the board, citing his own reasons.
Now, Microsoft did give us a statement on this, saying they received a concern in the latter half of 2019 that Bill Gates sought to initiate an intimate relationship with a company employee in the year 2000. A committee of the board reviewed the concern, aided by an outside firm to conduct a thorough investigation, provided extensive support to the employee who raised that concern as well. We also have a statement from Gates himself through a spokeswoman saying there was an affair almost 20 years ago which ended amicably. Gates' decision to transition off the board was in no way related to this matter. What do you make of this, given that there seems to be more, Ian?
Yeah, I mean, you're absolutely right. There's obviously been lots of reporting around this from ourselves and from other news organizations, which are, portraying sort of various different aspects that are outside what these two statements would seem to indicate. But even when you take these statements at face value, they don't quite match. The timing appears to be convenient, and the investigation wasn't concluded. So there's a huge amount of speculation about one of the world's richest men still out there, and probably that is going to persist and is going to impact his legacy.
Well, and certainly we have to point out that what might have been acceptable or not explicitly against the rules a couple of decades ago is not acceptable today. What does this mean for Microsoft? What could this mean for the Gates Foundation, where Bill and Melinda have said they are planning to continue to work together?
Yeah, I mean, Microsoft is the latest in a number of big, large companies that are really dealing with a phenomenon that you could argue, well, was kind of acknowledged as being sort of okay, maybe all of those years ago, or at least not explicitly against the rules. Since then, the rules have changed, and more importantly, as you wrote in your book, society's expectations for behavior, corporate expectations for particularly men in power's behavior have changed, and arguably should have changed sooner. And we're dealing with the legacy of that, and this is another example of that. So regardless of what material impacts it has on the foundation or on Microsoft, this is going to be lingering over an individual who's still enormously important.
Absolutely. Well, we are certainly going to continue to work on our reporting here and get to the bottom of it. Bloomberg's Ian King, thanks so much for your reporting there. All right, coming up, Apple has started to present its case in the closely watched antitrust trial with Epic Games. We'll have an update for you next. This is Bloomberg. Welcome back to Bloomberg Technology. I'm Emily Chang in San Francisco. About a quarter of Bitcoin's value has been wiped away in the span of a week, and a lot of it has to do with one person, and that is Elon Musk. Bloomberg's Kriti Gupta has more on the volatility surrounding the crypto space. And Kriti, Elon on the receiving end of some not happy Twitter followers, not happy about his latest tweets.
Absolutely, an insinuation that Tesla could actually have sold or will be selling their Bitcoin holdings, not doing great for Bitcoin, of course, over the weekend. But that is just the cherry on top of a not so great Sunday. Really, this idea here that Bitcoin has been on a negative downtrend for 7 days now. And yes, a lot of it has to do with Elon Musk. Some of it just has to do with broader risk sentiment. You can really see it here, straight shot down. And with it, it's taking its cryptocurrency stocks from companies like miners, crypto miners that a lot of people hop into as exposure to Bitcoin through the stock market. You see a lot of those names down, but even names like Coinbase, for example. So if you do actually look at several of the stocks that are crypto names, there we go. You do have them right here. Coinbase, for example, down 3.9%. It's only half the drop, or about half the drop you saw in Galaxy Digital, down over 7%. So once again, those crypto stocks not doing so well, in line with that drop. But let's dive deeper into Coinbase in particular, because it wasn't so long ago, Emily, where we did see that IPO. And since then, you haven't seen much progress. The question here is, does Coinbase actually improve as you start to see Bitcoin become more a part of kind of mainstream media, mainstream investments, or is this downtrend really something that's here to stay?
All right, absolutely. We're going to be talking about that all week, I am sure. Bloomberg's Kriti Gupta Well, from the jokes surrounding Dogecoin and Tesla, CEO Elon Musk tweeting the company didn't sell its Bitcoin stock has led many to question how serious he is about crypto. Galaxy Investment Partners CEO Michael Novogratz spoke earlier with Bloomberg about crypto volatility. Take a listen.
I think Bitcoin will be somewhere between 40 and 55,000 for the next chapter before it kind of builds up enough new momentum to take out that 55,000 and end the year much higher.
How concerned are you about the short-term volatility being introduced by Elon Musk?
Listen, Elon Musk is an important figure in American business, and certainly in the global retail crypto world, he's a bit of an icon. He was great for crypto when he was positive for Bitcoin. He's caused some issues. I think if you take Elon at face value, though, what he said was he worried that as Bitcoin used more and more electricity, which it will, it could have a negative impact on CO2 emissions. That's true for every industry. And so I think you're going to see a response from this industry, like you should see a response from every industry to say, hey, in this gap of time before all electricity is green energy, which I think is 7-8 years away, we should do something to offset our footprints. And that's in banking, it's in crypto, it's in tech, it's in industrial businesses.
Is it problematic that like one of the hottest currencies is a joke, Doge, and that Elon Musk, who is this sort of face of it all, is essentially whipping people into that one and sort of multiplying the jokes? And you have other influential people talk about even other jokes, and that this sort of does it make it harder to put on a, basically make the case that there's a serious industry with a straight face?
Well, listen, yes is the answer. I don't want to discredit the Doge community or any of these communities, right? What you're seeing here is a response against the monetary policy of the US and the world and the frustration people have had with the system. And this young generation has said, hey, we can band together and create our own way of investing. Some of it is frivolous and I think will end in tears. And so we try to steer our clients away from projects that we don't think have long-term sustainability. But it proves something that communities can band together. Right? The world has gotten very tribal, and that's not necessarily a good thing. And if you go on crypto Twitter, you really realize just how tribal it's gotten. One of my buddies made some negative Doge comments, and he got 6 death threats. And so that's not good. But I do think let's not miss the forest through the trees. Underneath it all, there's a huge revolution going on, run by serious people who are trying to rebuild the financial market infrastructure of this place.
Mike Novogratz there, CEO, Galaxy Partners. We'll continue to follow what happens with crypto throughout the week. Meantime, it is week 3 of the high-stakes courtroom battle between Apple and Fortnite maker Epic Games. And this week, it is Apple's turn to prove it is not an antitrust violator, with expectations that the tech giant will bring in its most powerful spokesperson, and that is Tim Cook, to testify. Bloomberg's Mark Gurman has the very latest. So, Mark, where are we with this trial?
Yeah, so we are in the probably final week of the trial. Today, we've heard Phil Schiller, the former senior VP of marketing and now an Apple fellow in charge of the App Store, testifying to Apple's business practices, why the App Store operates the way it does, and its interactions with developers. And we've also gotten a few interesting stats about how the App Store is run, that there are 280,000 games out of 2 million total apps, and how much it costs Apple to run its annual developer conferences.
So talk to us about the case that has been made so far. It sounds like you've repeatedly come out of these hearings feeling like Epic hasn't really proven its case.
Yeah, I mean, I'm not a lawyer or anything, but I've been listening into most of the trial on a daily basis, and I have simply not heard any compelling arguments or a seriously compelling argument for how Apple is doing something not necessarily wrong, but how it's really hurting developers on all levels. You've heard Microsoft testify, you've heard NVIDIA testify, but I don't think Epic has brought any smoking guns to the table about Apple, purposely trying to crush smaller developers. Personally, I think, Apple's App Store fees are a bit too high for the year 2021, given the economies of scale. Maybe 30% made sense where there were very few apps on the store, But now that 30% is generating nearly $20 billion in profit per year, and spread out across 2 million apps, that 30% is worth a lot more to Apple than it was way back in the day. So I think that needs to change. And even Phil Schiller echoed that when Apple launched its program to slice the fees for developers who generate under $1 million per year from 30% to 15%. Schiller said he argued for the cut to be below 15%. So I think this is something that Apple recognizes in some respect too. But regardless of opinions, regardless of how bad, Epic thinks Apple behaves, there is a contract at stake. And the first thing you need to know about the legal world is if you have a contract and it's legitimate and all parties have signed it and there's no, contractual issues there, it's pretty hard to argue with that piece of paper with signatures. And that's what Apple, for all intents and purposes, has with Epic at this point.
So Epic CEO Tim Sweeney was the first to testify. Tim Cook, we're expecting him to testify possibly before the end of the week. What do you expect to hear from Tim Cook based on what he has already said and statements that Apple has already made about this?
Yeah, first of all, I didn't think Tim Sweeney's testimony at the beginning of the trial was particularly effective. It sounded like he hadn't, fully woken up yet that morning. And of course, he's also first to speak, right? So he was the first person that the judge heard from, whereas Tim Cook is not only going to be Apple's closer, but very likely the closer for the trial. He's going to be the last major witness to speak unless there's some more procedural stuff tacked on at the end. And so the last message that the judge is going to be left with is the message from Tim Cook. And of course, what you're going to hear is how the App Store has benefited the economy, how much money the App Store makes, not for Apple, but for third-party and small developers, how it has helped people through coronavirus and such. So you can expect Tim Cook to really, play up the sort of the values aspect or how it generates money for the greater economy as he normally does, stepping away from whether or not Apple's practices are an antitrust violation or not.
All right, much more to come. Of course, we'll be following it every step of the way this week as the trial continues and concludes. Bloomberg's Mark Gurman, thanks so much for your analysis there. All right, coming up, like many tech companies, Salesforce is preparing for the return to the office, but for some of its employees, it means stepping fully inside the building for the very first time. We're going to hear from Salesforce co-president and COO Bret Taylor next. This is Bloomberg. When it comes to the debate between work from office and work from home, companies are taking all different kinds of approaches. Monday, JP Morgan reopened its offices across the United States. Tech companies, though, seem to be all over the map when it comes to the direction they will take. Some companies, like JP Morgan, are preparing for employees to return to campuses. Others saying employees can continue working from home for now. Yet others doing a mixture of both and figuring it out later. As part of our weekly work shifting segment, I caught up with Salesforce co-president and chief operating officer Bret Taylor at the New York Stock Exchange Tech Summit to talk about what the future of work will look like.
Well, I think the future of the work is flexible. Whether you're, trying to find a lower cost place to live outside of a city, or you're a parent like you are and I am, and, enjoy those afternoons with our children. I think the expectation right now from every single employee of Salesforce is some flexibility. We don't know what the future looks like, but we know the aspects of this year that has really transformed. It's shortened our commutes. It's given us more time with our families. On the other hand, I think people are really sick of being in their offices. We survey our employees, and in the early stages of this pandemic, no one to come into the office. It's well above 75% right now. People want that connection. And we're actually reopening Salesforce Tower in just a week. We're starting off with a small group of vaccinated people who are sort of raising their hand to volunteer, but I'm really hopeful that we'll open this up more gradually looking forward. Without question, it's going to change the way we think about our real estate and change where we hire from, hopefully in a more inclusive way all around the world, because I think we can recruit from everywhere. But I do think that, creative teams are often in the same place. There is that, casual conversation you get in the hallway that's hard to reproduce. And I think that when I look forward, I think the people saying it's all distributed or it's all in the office are probably too simple. I think we're going to say, how do you recreate a culture that is flexible? How do you end up in the office with the right people at the right time? I joke that flexible work isn't an individual decision, it's a team decision. So I think there's going to be a lot of software that helps companies go back to the office in flexible ways, like our work.com platform. And I also think we'll just have to see where people's expectations are on the other side of this pandemic. And it's fun to theorize about, but candidly, I think it's hard to predict.
So, even my children are familiar with the Salesforce Tower. It is San Francisco's largest private employer. How are you thinking about where to place jobs, given that many people have left the city and many people don't want to come back to the city? Do they all have to be in California or the Bay Area?
Well, first, I'm really excited about the Bay Area. I'm excited about all our hubs like Seattle, New York. All these cities will continue to be important hubs for Salesforce because they're important centers of business. And as an Oakland native, I'm never leaving the Bay Area. I love it here. On the other hand, you bring up a great point, which is I think we can recruit from more places. And so when I look at what does flexible work afford for forward-leaning companies, it's things like, can you drive greater equality and representation in your employee base? Because you don't just need to recruit from one metro area. You can recruit from areas with more diverse workforces. Can you find more talented people who might not have had the means or the interest to move to places like San Francisco? So when I look forward, it's not at the expense of San Francisco. We're investing in our HQ and we're a San Francisco company through and through. But I think we're looking at it with a really open mind and say, how can we create a more powerful and more inclusive and more talented culture on the other side of this? And I think that's the opportunity for every single company in the world right now. And I think it's really exciting.
It has been speculated that you are the heir apparent to potentially the CEO job at Salesforce. Is there any truth to that?
Well, I mean, I can't comment on that, but I will say, we actually talked, I think, just a couple of weeks after I sold my company Quip to Salesforce. And I can't say I imagine sitting in this chair right now as COO. And it's been by far the most fun time of my career. And both my relationship with Mark, which is amazing, he's a mentor and a friend, but also just being at this company right now. As I said, to be able to provide digital technology to so many companies who absolutely need it right now is the most privileged position I could be in, both as a designer of software, but also as someone who has formed great relationships with so many of our customers. So I'm really happy and obviously can't comment on that rumor, but I'm very happy in the job I'm in right now.
We shall see. Salesforce COO Bret Taylor there. You can catch the full interview at Bloomberg.com. All right, in the world of big tech next, Amazon is under fire after an employee testified that he saw guards use keys to open a box in a recent union election. Joining us now, Bloomberg's Spencer Soper. Spencer, what happened here? What do we know?
Well, if you guys remember that there's a big union election in Alabama, and the union lost. Workers voted overwhelmingly against forming a union. But now the union, the retail, wholesale, department store workers union that organized this campaign, is accusing Amazon of all kinds of misconduct around the election to try to overturn the results. And this mailbox that was installed right when the election began has really emerged as a central figure in this. And the union is making allegations that even the mere presence of this mailbox under the surveillance of Amazon security cameras, coupled with a lot of encouragement from Amazon managers to utilize the mailbox for to vote, could constitute an atmosphere of surveillance, and that's not a good thing in a union election. You're not supposed to have that.
Has Amazon responded to this particular part of this hearing, this particular allegation?
Yeah, in terms of the mailbox, they've said that they wanted to, increase turnout. Now, if we remember, ordinarily these types of elections would actually happen at the workplace in person. People would go to work and vote in person. But because of COVID, that was changed to a mail-in election. And generally, mail-in elections have a lower turnout than in-person elections for these types of things. And so Amazon said that it merely wanted this mailbox to make it easier for employees to vote, but it's also really made things complicated for Amazon in terms of and made it easier for the union to attempt to meet this threshold of a perception of surveillance, since this thing was right by the near the front door of this facility where there's security cameras everywhere.
So talk to us about the status of this hearing. Obviously, it's a very complicated situation. We know that Amazon won that union vote fairly overwhelmingly. So what's to dispute?
So we should remember that there were hundreds of ballots that were set aside, that were contested, that haven't even been opened or counted, because as a result of the vote count, those 500 ballots would not have counted either way. But still, the National Labor Relations Board that is conducting this hearing, they just want to know, was this a fair election? And if they make determinations that there was a perception of surveillance that could have limited turnout or coerced employees to vote a particular way, that could force another election, a do-over, so to speak. And so this is a big deal. And the hearing continued today. I was just on it now. It just wrapped before you guys called me here. And still they're talking about this mailbox, who had keys to it, why did they have keys to it, and it's still pretty mysterious. There's still a lot of open questions that's trying to get to the bottom of in this hearing.
So when are we going to get an answer here? And depending on what the answer is, what's next?
Well, the hearing will likely wrap this week. I think that the hearing officer was hopeful that they'd have all the testimony and everything completed this week. The union completed interviewing its witnesses today, and they're on to the Amazon side of the hearing with Amazon presenting its witnesses. So if they do conclude taking all of the testimony this week, then we'll have to wait for the hearing officer to make a recommendation and rule. And I'm not exactly sure how long that will take, but we should have something in coming weeks, some indication of whether this vote result is going to stand or if it could be forced to a revote.
All right, Bloomberg, Spencer Soper all over that hearing happening now. Thanks so much, Spencer, for that update. All right, coming up, a sneak peek at my Studio 1.0 interview with AMD CEO Lisa Su as the chip shortage continues to be a major disruptive market trend. More on that next. This is Bloomberg.
I don't remember a time in this industry when it hasn't been competitive. What I will say, though, is I'm really, really pleased with our, what we've been able to accomplish. I mean, it's fun to be able to say that, we have, really driven, the direction of computing in the industry. I mean, it's fun to be able to say that. And if I look at, some of the things that we've done over the last 5 years, we've really, changed, sort of what people expect from high performance computing. So I would say it's a competitive world, and we're going to be very competitive in the process.
Part of my recent conversation there with AMD CEO Lisa Su, she has been at the helm of the company since 2014. The stock since that time has largely gone only in one direction, and that is up. We're going to have more on her leadership style, competition in the chip industry, and of course, the chip shortage this Wednesday. She is my next guest on Bloomberg Studio 1.0, airing 5:30 p.m., 9:30 p.m. Eastern Time, right here on Bloomberg Television. The chip shortage is, of course, one of 3 tech trends we're seeing play out big time in the markets. Bloomberg's Christine Aquino has the rundown.
This is Market Bites, where we give you 3 things to think about when it comes to markets. This week, it's all about the chip shortage, tech's bond binge, and China's e-commerce battle. Chip shortage. The world is running out of computer chips. Why? That's because of increased demand during the stay-at-home era, followed by a ramp-up in orders through the reopening and a cold snap in Texas, which has all contributed to a dearth of computer chips. The effects are being felt by makers of cars and game consoles, and it's increasing the world's reliance on 2 chip powerhouses, Taiwan Semiconductor and Samsung. Tech bond binge. Amazon is borrowing $18.5 billion of debt that it doesn't need. Why? Because of super low rates. Amazon joins Apple and Oracle in taking advantage of the lowest borrowing costs in 3 years relative to treasuries, And it plans to put this money to work. Some of it will go to green and social projects, according to bond documents. China's e-commerce battle. ByteDance wants to show that it's not just about TikTok. It's battling Alibaba for a share of China's e-commerce market, which is worth $1.7 trillion. It's doing this by hiring staff and bringing in sponsors to sell products through short videos and live streams. That's after it sold $26 billion last year. That's it for this week's Market Bites. I'm Christine Aquino. For more content like this, make sure to follow us on your favorite platforms.
That does it for this edition of Bloomberg Technology. Christine Aquino there. Tomorrow on the show, we've got Tim Westergren, the co-founder of Pandora. He'll talk about his next big bet in the music industry and where he thinks music streaming goes next. Thanks so much for joining us. I'm Emily Chang. This is Bloomberg.